Hello friends. Welcome to my channel Craze. Today we are going to discuss the basic concepts of share capital, which is a very important component in the balance sheet of a company. In this video we will cover the following broad topics. What is share capital? Types of shares. Authorized, issued and paid up capital. How companies use share capital? Role of shareholders. If you are new to the world of finance or just looking to refresh your knowledge, you are at the right place. This video will have lot of insights, which will be very useful for students and professionals in the field of finance and accounts. So, let's get started. What is share capital? Suppose there is a company X, which requires fund for its business. Now, the company has two broad ways to raise funds. One option is to take loan from bank or any financial institution, and the other option is to raise money from investors. In the first option, the company will have to pay interest against the bank loan amount, whereas no interest is to be paid for the amount taken from the investors. Now, let us understand more about the money raised from investors. Now, if the company X raises fund from investors, then, in return, it issues shares to them. The money that is raised from the investors, in exchange of shares, is called the share capital. This is an important concept and hence I request you to continue till the end, for better understanding. Meanwhile, if you like this video, please like and share the same. Also, if you have not subscribed to my channel yet, please do the same for more such videos in future. Now, let's continue on the subject. Let's talk about the types of shares. While companies may have many types of shares, the two major types are equity shares and preference shares. Equity shares represent ownership in the company, with voting rights. Whereas, preference shares usually do not have voting rights, or have limited voting rights. For equity shares, dividends are variable and depend on company's performance, whereas, preference shareholders receive fixed rate of dividend, prior to the equity shareholders. Let's know more about the differences in equity shares and preference shares. Equity shareholders bear high risk, but have potential for higher returns. Preference shareholders have more predictable income, but may not benefit much from company's growth. Equity shares are not convertible to other securities, whereas, some preference shares may be convertible to equity shares. Thus, we have got a fair idea about the major differences between equity shares and preference shares. Now, let's break down the capital structure. The maximum amount a company is allowed to raise through the issuance of shares is called the authorized share capital. Portion of the authorized share capital that the company has actually issued to its shareholders is called the issued capital. Paid up capital is the amount that shareholders have paid for the issued shares. Companies use the funds raised through share capital for various purposes, such as expanding operations, investing in new projects, or paying off debts. Let us understand this with an example. If the authorized capital of company X is $10 million, that is, 1 million shares at $10 per share, and the issued capital of the company is $5 million, that is, 500,000 shares at $10 per share. And, if investors buy 300,000 shares, out of the total issued 500,000 shares, then, the paid-up capital of company X will be $3 million. Hope you have got this concept clear. Let's understand the role of shareholders. Shareholders are the legal owners of the company. The percentage of shares owned by the shareholders determine their equity stake in the company. Shareholders have the right to vote on significant corporate matters. Shareholders have the potential to benefit from capital appreciation and dividends, if the company performs well. Shareholders assume risks associated with their investment in the company. Thanks for watching the video. If you find this useful, please like and share the video. Do subscribe to my channel for more informative videos.